Ladies and gentlemen, welcome back to the channel. We need to get into everything that you need to know about the markets today, as well as with AMC stock. And what we are about to see right now is Janet Yellen speaking again into the last couple of minutes of the close. She'll probably start talking after hours. So if you get any big moves in the markets, that's probably what it's about, just so you guys know. At the time of recording this video, you have about 13 minutes left of the trading day, and things are pretty bullish today. Large technology companies continue to pave the way, putting the Nasdaq into a fresh new bull market. AMC stock remains to be range bound on very little news, but the data under the surface, if you have not seen the last video, is telling you that someone somewhere knows something, and we'll also talk about that here in this video, guys. So the work is cut out for us. We have major economic data coming out tomorrow that again will also move the markets that you need to know about. So hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. So first things first, AMC stock is down about 2% today, in line with what some other stocks are doing in the markets. Really not a underperforming kind of day for AMC, considering the markets are not so well under the surface. It's really large tech that is carrying the wave, that is pushing the Nasdaq into bullish territory. And a fun fact here that we share as well in another video that does come out later today is that if you took out the top 5 to 10 stocks, really the top 5 stocks in the whole S&P 500. So if you took out the top 5 and you left 495 of the other S&P 500 companies, the S&P 500 would actually be slightly negative for Q1 2023. If you add in the large tech companies that controls over 30% of the S&P 500, you're up about 3% on the year so far. So there's a huge discrepancy as of lately what's been going on in the broad markets to what has been going on with large tech. Now, with that being said, let's get into what happened in the markets today. Another relatively slow day. You did get initial jobless claims that came in a little bit higher than expectations at about 198,000. You were expecting 195,000 initial jobless claims, so a little bit worse than expectations, which is seen as a little bit better than what it obviously could have been on the front of inflation. The Fed wants to see labor market conditions really deteriorate before they feel confident enough to start pausing or to start cutting rates. Markets are expecting a lot of rate cuts for 2023, so we're going to have some high expectations of the labor market weakening in 2023. So that's really the big thing that happened today. You did get a couple Fed speakers as well that pretty much said the same thing across the board, that there's more work to do on inflation, that they do forecast a 25 basis point rate hike at the next Fed meeting. That was Fed Kashkari. He was the one voting member that did speak today. You also had Fed Collins and Fed Barkin as well, or Harkin. Harkin. She's barking and harkin. But they were basically in unanimous agreement, so nothing spectacular came from that. Really, the big story is going to be the economic data that will be coming out tomorrow. If you have not seen yet, for whatever reason, we'll get into it right here and right now. So, personal spending month over month for January came in at 1.8%. Tomorrow's reading for the month of February, you are expecting 0.3%. So you're expecting personal spending to basically fall off a cliff. You're expecting core PCE price index to come in at 0.4% month over month. January's reading was 0.6%. So anything higher than 0.4% is not going to be good. Specifically, if we did get a number higher than 0.6%, that's going to be very, very negative, because that's the Fed's preferred measure of inflation, and the markets right now, they're expecting 4 rate cuts by the end of this year. Now, let me tell you guys right now, before anyone else is saying this, the only way you get 4 rate cuts is if inflation falls off of a cliff, or the economy is so bad that the stock market's hitting new lows, the bond market's ripping, right? Volatility is through the roof. That's the only way you will get rate cuts if inflation is this high, period. So rate cuts, they're not really a good thing unless inflation falls off a cliff. So all of these inflation readings that we get from now until essentially throughout the rest of this year are going to be very important implications for where Fed policy is going to go. On top of that, you are going to get personal income month over month. For February, you are expecting 0.2%. For January, it came in at 0.6%. So you're expecting personal income to fall off a cliff. You're expecting personal spending to fall off a cliff. And you are expecting core PCE to remain very, very elevated, but not quite hitting a new high. So long story short, what's the worst case scenario tomorrow? Well, worst case scenario tomorrow is personal income coming in higher than 0.2%, which is probably likely. It would kind of lead to that, or lead to those fears of potentially a wage price spiral. Worst case scenario, core PCE comes in higher than 0.6%. In worst case scenario, personal spending goes negative. The last thing you want to see, personal income rising, personal spending falling, and inflation going higher. That's the recipe for stagflation, essentially, where you have very high inflation but stagnation, or stagnant growth, I should say. So that's what you need to be watching for coming tomorrow. All of those data points will be coming out at 8:30 in the morning. So before markets do start to trade the cash open, markets today obviously looking ahead to bullishness in the future. Markets, as of the time of recording this video, S&P 500 is somewhat rallying into the close the last couple of minutes here, really not fearing any potential negative economic data coming out tomorrow morning. After all, the S&P 500 is up over 3% on the week alone. If you average that out, that is over a 0.5% gain every single trading day of this week so far, and tomorrow could add to that rally or really put a break on it. But as of right now, markets are in full-blown rally mode based off of large cap tech. Now, that's basically all you get. Like I said, you have Janet Yellen that is speaking right now that will also be important. And you do have a lot of option activity for tomorrow on the S&P 500 that is very negative, actually, believe it or not. For calls, the open interest sitting at about 30%. The open interest for puts sitting at about 70%. So you do have a lot of open interest that is with that downside tilt, not really being reflective of the market's sentiment here today, being very, very bullish. And weirdly enough, Bitcoin is actually down quite a bit today. It was down a lot more. It has since recovered a little bit, but still pretty negative in the land of crypto. Now, the Ortex data that we are seeing for AMC stock is also encouraging. 25.11% short interest of free float, 129.66 million shares that are currently sold short, 400% cost of borrow average, cost of borrow max of 436.64%, and cost of borrow minimum sitting at 0.5%. Yesterday's reading was 115%. Interactive Brokers short availability has about 4,000 shares currently available to be lent out with a cost of borrow rate of about 200%. So you are looking at some very high cost to borrow numbers on AMC still, and that is definitely something that is worth paying attention to, that we have been bringing to your guys' attention. Now, someone somewhere knows something. The option activity today has been very bullish. As you can see, look right here. All of these options coming through are calls. You have since seen a couple very large puts come through that has off-weighed the positive order value by quite a bit since the last video. You had this trade, $10 call for April 21st worth $3 million. Another May 19th, a put actually. Another May 19th $10 put worth about $3.5 million. Another $1 million put trade. Another $1 million put trade right here that is offset otherwise very bullish activity for AMC stock here today as far as options. If we look at the final numbers, 38 orders totaling about $20.37 million. Positive order value, still sitting at 36%, which is a lot higher than what we have typically seen. As far as the price action, though, for AMC stock, that's where I think it's important for everyone to realize, until we get new information about this court litigation April 27th, or we get new information regarding the potential buyout of Amazon and AMC, the stock's probably going to trade in the range of $4.50 per share and $5.50 per share. I don't really see a break above that without news, and I don't really see a break under that without news. So good thing is you are pretty range bound here. We're going to be at the helms of the economic data that comes out in the market, specifically tomorrow with inflation, but things are looking more better than not right now for AMC stock, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.